Good morning and thanks so much for tuning in. Welcome. Happy Monday to you. This is NDTV Profit. My name is Mathew and you're watching All You Need to Know. Over the course of the next half an hour, we'll set you up with everything you need to know at the start of your day. Let's start with the headlines. It's a cautious start for risk assets in Asia. That's after bond yields in the US rise past the 4% mark, as US jobs data comes in much better than expected. Back home, the focus shifts to results as IT majors kick off the earnings season late this week. Shares of Bajaj Auto will be in focus this morning as the board meets today to consider buyback of shares. Saudi Arabia cuts oil prices to Asia to the lowest level in 27 months as weakness in demand persists. China announces fresh sanctions against 5 US companies in response to the latest arms sales deals to Taiwan. The Maldives government on Sunday suspends 3 of its ministers after they shared offensive remarks against Prime Minister Narendra Modi on his Lakshadweep visit on social media. All right, now Saudi Arabia will cut key crude prices for buyers in all regions, including in the main Asia market for February amid persistent weakness in demand. As of this morning, Brent crude was trading at close to $78.5 to the barrel. Now, remember, this is around when you have a lot of refiners around the world and in the Asia region that head into shutdowns in order to conduct maintenance, and it seems like Saudi Arabia is using that period in order to reduce the prices. Now, China has announced fresh sanctions on 5 US defense industry companies in response to the latest arms deals with Taiwan. That's according to a statement by the Chinese Foreign Ministry. The measures consist of freezing the properties of those companies in China and prohibiting organizations and individuals in China from transactions and cooperation with them. In international markets, major cues are being taken from the jobs data that came out at the end of last week in the US. And the job growth was unexpectedly higher in December, according to government data, and it wraps up a solid year for the labor market there. The US economy added as much as 216,000 jobs in the final month of 2023, and that's despite expectations of a slowdown from the prior month, and that's according to Labour Department data. The unemployment rate, meanwhile, was unchanged at 3.7% and held at a historically low level and defied forecasts of a small uptick. Now, all of this is leading into expectations of higher for longer. And remember, this is a very sharp change from what you saw just a few weeks back. To put some of this in perspective, I'm joined by Arvind Sanger, who is managing partner at Geosphere Capital this morning. Morning, Arvind. Thanks so much for taking the time. It seems like some of those bets of very aggressive rate cuts have now been unwound, with bond yields going back up over 4%. Is this now moving back to the expectation of higher for longer?
I suspect so. I think people got very, very optimistic after the December FOMC meeting that rate cuts were going to come much quicker than what even the Fed was forecasting. And I think inflation seemed to be on a strong downward trajectory. And the hope and the expectation was that employment statistics would also turn more moderate, and therefore that would support this falling inflation. But I think, there's a couple of things that have gone to upset the apple cart. One is clearly employment has not fallen off as much as expected. Second, which I don't think is being talked about yet enough, is that, this outage of shipping in the Red Sea and the Suez Canal because of the Houthi actions. Those are the kind of things that create friction that could cause inflation to be stickier and not come down as quickly towards the 2% that the Fed was, kind of counting on, and that the market was counting on, that the inflation is going to be so quickly on a glide path towards 2 that the Fed can start cutting rates quickly in March, even if it's not 2%, but it's so visibly headed towards 2. And now I think that thesis is being questioned.
Okay, so from that perspective, and we were also talking about oil prices, and the latest update, of course, is that Saudi Arabia is cutting prices in February for a lot of its key markets. Crude seems to be not rising as much as people had expected, and that's, it's benign. And so from that perspective, according to you, what are the major triggers that you're focusing in on? The jobs data that came out on Friday was the previous trigger. What are you looking forward to?
Well, I'm looking forward to seeing how this, 35% increase in shipping rates for container shipping, which is consumer related, how that plays through in the domestic, retailers, which will not be visible in the next week or two, but in the next month we might start to see some evidence of that. And crude, keep in mind, has also rebounded, a few dollars, $5 or so off the bottom, $4 or $5. So yes, crude is not a problem for sure at these levels. But it bears watching to the extent that Middle East tensions do arise, further with Iran moving a warship into the Red Sea. I was at an energy conference last week where people were talking about the fact that Iraq could be an area of disruption potentially. I mean, so these are some of the risks out there. But I think in general, I'm not expecting a big shock on inflation, but I'm just concerned that the inflation subsiding towards 2% very quickly is something that may remain questionable for a few weeks, and that could be why the markets are taking a breather.
All right, markets taking a breather. Thank you so much, Arvind, for joining us and giving us a perspective this morning. Pleasure speaking with you.
Thank you.
All right, let's turn to the Indian equity markets and get you the latest cues from the F&O space. Agam is standing by to tell you just about that. Morning, Agam. What are you picking up?
Right, Alex, good morning. We saw gains on Thursday and Friday, which means that we've seen a little bit of reversal after the kind of weakness that we saw earlier in the week. As far as Friday is concerned, the Nifty moved up by another 0.25%. We saw about a 2% added in open interest, potentially towards fresh longs. As far as the Bank Nifty futures go, that's where we also saw, flattish movements, but a lot of unwinding coming through. And, that also was perhaps a lot of the older positions being built, which were unwound as far as Friday goes. The question really is that where do we go from here on the Bank Nifty? I'll come to that in just a bit. Let's talk about the options market to give us an idea about the kind of range that the option writers are expecting the Nifty to be within. So as far as the open interest distribution is concerned, we're still looking at, while there is max OI around 21,800 at the moment, and that will be a little bit of a resistance zone. Perhaps positionally speaking, over the span of the next couple of weeks, it will be 22,000 on the higher end, which will perhaps pose as a stiff resistance. On the lower end, it will be 21,500, where we are expecting to see some support come through. Let's take a look at what's happened on Friday. And on Friday, we didn't really see too much happening. A lot of activity was around 21,800. And that's likely where we will continue to see a little bit more activity when it comes to the Nifty going forward. Coming down to your stocks, we do have, it wasn't a great day when it comes to market breadth, and we did have a lot of fresh shorts in something like a Nestle, Shree Cement, Kotak Mahindra Bank, Alchem Laboratories, and Oracle Financials, on the other hand, saw some longs building in. But in terms of other stocks which saw unwinding, that is a decline in open interest, we saw a long unwinding across in GNFC, Chambal Fertilizers, Oberoi Realty, Gujarat Gas, along with India Cement. The question really is that, are we expecting about a consolidation? That is the most likely scenario, considering the kind of moves that we have seen the Nifty and the Nifty moving up. Alex, and of course, today we're also keeping an eye on the mid-cap CP expiry. Absolutely.
Thanks so much, Agam. And ahead of the kicking off of the earnings season later this week, of course, you have the major IT companies that will be reporting their numbers starting, of course, Thursday. Now, let's talk about the Indian economy. The first advance estimates on India's GDP growth for the current financial year by the Central Statistics Office is out. And the Indian economy is expected to show strong growth in the current financial year. In fact, ahead of estimates by both economists as well as the RBI themselves. We've got Pallavi joining in to give you some perspective on the latest numbers. Pallavi, what can you tell us?
The Indian economy is expected to show strong growth in the ongoing financial year amidst resilient economic activity. GDP is estimated to grow 7.3% in FY24. That's according to the first advance estimates released by the Central Statistics Office ahead of the Union budget's preparation. Now, this is compared to the provisional estimate of 7.2% in FY23. The figure is also much better than was forecast. A Bloomberg poll of economists estimates GDP growth to come in at 6.7% in FY24. Now, the central bank had also projected growth for the full fiscal year at 7%. Gross value added, which strips out indirect taxes and subsidies, is expected to rise 6.9% compared to growth of 7% in the previous fiscal. Most importantly, nominal GDP, which is the figure that will be used as the base for the upcoming budget, is estimated to rise by just 8.9%. That's against a rise of 16.1% in FY23. Let's have a look at what sectoral trends are projected to be for the ongoing fiscal year. Agriculture is expected to see muted growth at 1.8%, but mining and manufacturing are set to perform better at 8.1% and 6.5% respectively. Construction is expected to show strong double-digit growth at 10.7%. Trade, hotel, transport is expected to grow by 6.3%, whereas the financial services sector is set to grow by 8.9%. Now, moving to expenditure trends, here again, private consumption shows a little bit of a concerning trend, and that's expected to grow by 4.4%, but investments are expected to record double-digit growth at 10.3%. Growth in government final consumption expenditure is being pegged at 4.1%.
All right, so in case you missed any of those numbers, you can find all of those details in the story on the website ndtvprofit.com. We have to slip into a very quick break. We're back on the other side with stock-specific action, so do stay tuned. Welcome back. You're watching All You Need to Know. It's time to look at the stocks that are likely to be in focus in trade today. And there are quite a few of them that are going to be looked at very closely on the back of order wins as well as deals that are being signed. And Mika is joining in to tell you about a few of those stocks. Morning, Mika. What do you have for us?
Yes, so first I'll focus on the order wins. We have a Jupiter Wagons, which has received a 100 crore order from a leading automobile manufacturer. And this is an order for 4 rakes of double-decker automobile carrier wagons. And this kind of wagon is the first time it's been introduced to the Indian Railways. And according to the company, has a significant contribution to Atmanirbhar Bharat. And it's also, this is on the back, the company has been receiving multiple orders in the past month or so. It received a 470 73 crore order just on Jan 4th from the Ministry of Defence. And it also received a letter of acceptance from the Ministry of Railways for a contract worth 1,617. Then we had SJVN, which has signed a power usage agreement with Uttarakhand Power Corp. And this is for the power supply of 200 megawatts from an under construction Bikaner solar power project, which is of 1,000 megawatt. And the development project cost of this project is 5,491 crores, and it's expected to be commissioned in April 2024. And we have an Edgy Infra Engineering, which has received a letter from the North Central Railways, and it has been appointed for the redevelopment project on an EPC mode for the Kanpur Central Railway Station. Now, the project cost is at 655.09 crores, and the project completion period is set for 36 months.
All right, thanks so much for those details. But there's also Cipla to watch out for, right, Pika? Because its UK subsidiary has gotten into a joint venture. I believe this has to do with novel cell therapy. What can you tell us about that?
Yes, we actually have two updates. So first one, its UK subsidiary, like you mentioned, Cipla EU has entered a JV agreement with Chemwell Biopharma UK and MNI Ventures Mauritius. Now, they are going to incorporate a joint venture company in the USA, and this will mainly be focused to commercialize novel cell therapy in the USA, Japan, and EU region. Now, the company will subscribe to 352 shares of $1 each initially and have an initial investment of $0.41 million. And post the completion of the investment period, Cipla EU will hold 35.2% stake in the joint venture, and the investment completion is expected in 60 days with the agreement signing. And then there have been amendments made to Cipla Technologies and Pulmatrix definitive agreement. Now, the agreement initially was for the development and commercialization of a drug called Pulmazole, which is mainly to treat allergic ABPA in asthma patients. Now, there were two amendments made. First one is they're going to terminate the phase 2B clinical trial of the development of the drug by 30th July 2024. And lastly, Cipla will have exclusive rights for the development and the commercializations of the drug in all countries except USA.
Understood. Thanks so much, Mika, for getting us those details. Now, we're focusing on the insurance pack and particularly on general insurance companies because the data for the month of December is out, and the gross direct premium income of general insurers, excluding specialized companies, has risen by as much as 16%. To give you the fine print and which companies stand out, we're joined by Harsh Saita. Harsh, morning. What are the key details to focus on here?
Well, yes, Alex. So I'll break this up. One is the set of companies which are into only health insurance. That particular basket has grown by a solid 26% year over year for the month of December. And the other general insurers have grown by roughly 15%, just below 15%, taking the overall outside of specialized companies to 16.2%. So it's largely led by the health insurance pack. Now let's focus on some specific names. One, Bajaj Alliance, that one has shown robust growth within the non-health insurance pack. It's grown at 18%. So it's gained market share in the month of December 2023. Year to date, GDPI for this one has grown by 34%. So a significant growth prospect with regard to its market share gains that it has seen year to date as well. Quickly shifting focus to ICICI Lombard, that's the other big one. GDPI has risen 20% for the month of December, and year to date it's grown by 16% for the year-to-date, year-over-year period. Now, New India Assurance is, of course, the PSU stock has surged over the last couple of months. We've seen GDPI growth there of around 14.5% for December 23. Of course, it's able to sustain its market share. That's a positive. But for the year-to-date period, it's grown by just 9% when the industry has grown at 15%. Star Health, 14.5% growth for December 2023. Year to date, it's grown by around 17.5%. It's shrunk its market share for the month of December. All of these will be in focus on the back of those numbers.
Understood. Thanks so much, Harsh, for bringing us those details. Now, we also have companies like Titan, Marico, Tata Steel, Adani, Wilmar, and Godrej Consumer in focus on account of their third quarter business updates. And Mahima is joining in to give you some perspective on all of those. Mahima, over to you.
Right, Alex. So as you rightly mentioned, I'll first talk about Titan. Well, Titan company has reported a 22% year-on-year growth in their revenue, and they've added 90 stores in total in Q3. And if all their segments, that is their jewelry, watch, wearables, emerging business, and CaratLane have shown double-digit growth in terms of volume, only their eye care segment has declined by 3%. Then we had Marico, where the company's Q3 consolidated revenue declined to a single digit on year-on-year basis, and however their gross margins have shown a robust expansion. This is because their raw material prices have gone down. Their domestic volumes also grew on a low single-digit levels. However, their international business has grown on mid-single-digit levels. Then coming to Godrej Consumer Products, the company has reported a double-digit volume growth in India and Indonesia. The Godrej Africa, US, and Middle East has seen a high single-digit sales decline. However, the Latin America business has shown a positive volume growth. So overall, for Godrej Consumers, the Q3 sales the growth has remained flat. Then we have Adani Wilmar, where the sales has declined 15% year on year. However, in terms of volumes, it is one of the best quarters that they have recorded. Their EBITDA oil sales margins have declined by 21% year on year, and their volumes have remained muted for edible oil business. And their food and FMCG businesses performed pretty well, where their sales grew by 28% and volumes grew by 18%. And lastly, we have Tata Steel, where the company has reported a steel output of 5.32 million tons, which is up 6% year on year, and their deliveries stand at 4.88 million tons, which is up 10% year on year. So this is all on the back of the Q3 company update that we have received on Friday so far.
Thanks so much, Mahima. Sticking with company updates, and we've got news from the banking space. Pragati is joining in to tell you about a couple of those. And in fact, there's also a succession update from Federal Bank's stables. Pragati, what can you tell us this morning? Morning.
Good morning, Alex. You're absolutely right. On Friday, after the markets closed, we had two business updates coming in from the Union Bank of India and Bank of Baroda. As far as Bank of Baroda's Q3 business updates are concerned, we have some provisional figures on the global business updates. The global business was up 10.7% year on year. As far as the global advances and deposits are concerned, both were up 13.6% and 8.3% year on year. Like many other banks, even for Bank of Baroda, we saw that the advances or the growth in advances was more than the growth in deposits, which is also a trend that we are seeing across several banks this time. As far as Union Bank of India's third quarter provisional figures are concerned, we know that the advances are again up 11.4% year on year, and the deposits are up just about 10.1% year on year. The total business has also not shown significant growth. It is just up about 10.7% year on year. But we must remember that these are the provisional figures. The actual numbers are yet to be out once the earnings season for the banking sector kicks off next week. As you rightly mentioned, we have a major succession planning update coming in from the Federal Bank. NDTV Profit also exclusively reported on this before, that Federal Bank has started succession planning, and this reporting was done by us back in November. But now we have an update through an exchange filing that the RBI has asked the Federal Bank to submit the names of two candidates, or at least two candidates, for the position of the MD and CEO of the bank. Now, this has come after the bank sought a one-year extension for the current MD and CEO, Mr. Shyam Srinivasan. We must remember that Shyam Srinivasan's term is ending in September 2024, that is this year, and hence the RBI has resorted to action and asked for the succession plans from the bank as of now. There is a very interesting thing here that we must remember, that the RBI norms, or the April 2021 guidelines, clearly mention that the post of an MD and CEO cannot be held by the same incumbent for more than 15 years.
Understood. Thank you so much, Pragati, for bringing us those details. Let's quickly focus in on Life Insurance Corporation of India. We were speaking about this last week on the editor's cut, and well, so happens that brokerage firm MK has upgraded its rating on LIC to buy with an increased target set at 975 rupees. Harsh is joining in to give us some perspective on that. Harsh, it's still one of, I think, 6 brokerages out of the list that has a price that is higher than the current market price, right?
Well, yes, one of 6 now, Alex. Earlier was 5 last week that we did speak about on Editor's Cut. But very quickly speaking, 35% in terms of returns since the month of November. And what MK seems to suggest is several factors really aiding this fillip that the stock has seen. One is attractive valuations. They've now at 975 target price. They've given it a valuation of 0.8 times embedded value, but December 25 expected embedded value. Now, the stock is currently trading at 0.8 times its current embedded value. So that's where MK really places it. Of course, it's a December 24 target price of 975 based on December 25 embedded value 0.8 times. Now, the other piece is the EV growth. The EV growth, which is the embedded value growth, which LIC has seen, has been quite steady and strong. 20% growth in the first half of FY24, my apologies. First half of FY24, 20% growth when I'm looking at it on a year-on-year basis is quite steady coming in from LIC. Also, they believe that growth revival has happened on a lower base. This is, of course, from a revenue top-line perspective, and they're expecting that growth to kick in FY25 as well. Along with what will really aid growth is product offerings. A larger set of product offerings will aid growth going forward. And another piece which MK is really keen on is to see how the dividend policy is evolving. Huge amount of free cash flow which LIC generates through dividends as well as stock returns. And some of those stock returns not entirely built in when LIC gives out its guidances. So as they start building that and as they start seeing a cushion with regard to stock valuations as the market has run up, MK does believe that there is a case for a higher dividend policy coming in from LIC. So all of that in focus. Of course, multiple tailwinds, hoping that share price sustains, is MK on LIC.
All right, and the stock has in fact gone up quite substantially. Thanks so much for getting us those details, Harsh. That brings us to the end of this particular edition of All You Need to Know, but there's lots more that you need to know about before the start of trade. You'll find all of that on India Market Open. Do stay tuned. This is NDTV Profit.